Hey, this is Pascal for Vanguard Global LLC and VanguardGlobalLLC.com. This is a video for our program, $30,000 to $300,000 in business credit and business credit building, obviously. So in this program, in this particular video, I should say, what I'm going to go over with you is just the whole thing about credit, and I just want to give you a little bit of proof, if you will. So here are some credit cards that I was able to develop, and obviously these aren't all mine. Some of these are my wife's credit cards that, and these are all old, so I don't want anyone to get any ideas. I intentionally crossed out the numbers here because I just don't want anyone to get any ideas, and I don't also want anyone to get themselves in trouble by trying to use dead credit cards. So with all that said, let me just get into this. So as you can see here, this is a Citibank card. With this Citibank credit card that I got back in the day, it was for a business called Scooter King Inc. And you see right next to it, there's another card for a business called PDMS Medical Inc. Okay, so with Scooter King Inc., PDMS Medical Inc., and several other businesses, I think that's primarily what I put on this sheet here, are those businesses. We've had many more. What I need you to grasp and really pay attention to is that just because you start one corporation doesn't mean that you can't start another and start building credit on it as well. But with that said, I do want to say to you that I would like for you to start building out one corporation first before you start delving into another, okay? At least to a degree. So at least, until you have somewhere between $50,000 and $100,000 built on one company, then start building on the second company. Okay. Now I want to show you some tricks, and there's a reason. It's not even a trick. There's no magic to it. There's nothing to it. It's just doing what they're asking you to do, and that's what you always have to remember when you're dealing with credit: is find out what the credit grantors want you to do, and then just do it. Right. So as I've said in the past, if you were to even look on your credit report, and so many people do not do this, if you were to look on your credit report and you scroll all the way down to the bottom, they give you suggestions on what would be necessary to improve your specific credit file. And so with that said, if you were to do those things, if you were to do what the credit grantors are asking you to do, what the credit bureaus are asking you to do, then you're going to have just, ridiculously cool, good, great credit. So let me get back to this. One of the things that you could do, one of the tactics, and this is one of the reasons I would prefer that you build out on one credit card before you build out, on one business before you build out on another one. So let's say that you've gotten to, let's say this is your business, right? Scooter King Inc., which is, once again, it's a defunct business. It's no longer in play. It's just one of the businesses that we've had in the past. So let's say that Scooter King Inc. is your business. Let's say that you've developed, I don't know, let's call it $100,000 worth of credit overall with Scooter King Inc. And part of that $100,000 credit mix is this card. And let's say this is a $10,000 Citi business card. Well, if you had this $10,000 Citi business card, and then you've done what I said, and you developed $50,000 to $100,000. Well, you could literally take or call Citi or Chase or any of the other vendors that you're going to deal with, and you can ask them. You can say, "Hey, look, I've created another corporation. In this case, we're going to call it PDMS Medical Inc. When you've created this second corporation, instead of going through all the rigmarole that you've gone through, what you could potentially do, they're not always going to do this for you, but there's no reason for them not to, okay? It just depends on what's going on at the time with your overall credit, with your overall position, so on and so forth. But what you have the ability to do here is you can ask them that if they would take $5,000, half of this credit card that you have here in front of you, this city business card, and put $5,000 onto your new business entity. So in other words, you're going to take this, I know it's really simple, but I want to say it. You're just going to simply take the $10,000 that you've developed with this city business card and put $5,000 on your new business. And in some instances, they won't even run your credit because it's already there. It's already established with them. Does that make sense? So and you're not asking them for any more. You're not asking them for anything else. You're just simply saying, I have another business and I would just like to take half of my balance and place it over here. That's it. And if everything is in good standing, there's a great potential of them doing that for you. Now, here's the magic of that, and I know there's no real magic, but the thing is that once you have this city business card, and you have that $10,000 limit, and then they do choose to do that for you and place $5,000 on the other side here on your other business that you've started. Well, what you can do then is within a few months, it already has $10,000. It's been there before. So within a few months, you can go back to them and say, hey, look, can you please raise this back up to 10 grand? And then you can do the same thing over here with your other business, right? So now, instead of just having a $5,000 card or even a $10,000 card that you're going to get these incremental raises in, okay, you could potentially go from $10,000 that they might raise you to 15, right, to a $5,000 card that they're going to raise you back to 10, and then over here they're going to raise you back to you can get them to raise you to 10 as well. So now you've just created $20,000 in credit for yourself, right? Same entity, same everything, but by splitting that money, now you can potentially raise even more money. So that's something I want you to consider. That's something I want you to keep in your mind. So now I want to just go through this. This is a Chase card. With Chase, this is something that's important for you to know. With Chase, with any of the card grantors that have multiple different types of cards, like Chase, like American Express, you can get multiple cards in that, from that particular company. I don't know this to be, for sure, but it seems to me like there's just, like within Chase, there's these different companies, if you will, right? That so one group or groupings, I guess, so one group handles the Chase business, okay, and then the other group handles the Chase Freedom, and the other group handles the Chase Professional, so it's just kind of odd to me. But you can get from one company, mind you, you can get like a ton of money. So like with Chase, once again, here we have Chase Business, and this Chase Business card, this particular card at that time was something like a $30,000 card, right? This Chase Freedom card, I don't really remember, but I know and believe it was probably, I don't want to lie on it, but it was probably somewhere around 10 grand or so. And then once again for this other Chase Professional, this one was I don't recall. I don't want to lie. So but the point is that you can get all these different Chase cards. 4246. Is that a duplicate card? 4246. You know what? I should have probably looked at that closer. Let me look at the expiration dates on these. No, these are two different cards running consecutive. So I had two different Chase business cards, because all the dates, Scooter King. Okay, so two different cards running consecutive. Same thing. But my point is that there's money out here, but you just have to go after it. Once again, we have I was talking about Advana Bank earlier. Uh, there's money. Now, Capital One. Here's the thing about Capital One. Capital One, they don't really give you a bunch of money, right? But in what you're trying to accomplish here, some is better than none. Okay, so this Capital One might have been, I don't know, maybe 7, 8 grand, something of that nature. I don't really recall. I'm just trying to go off of my memory, but it was something like that. It wasn't a great deal of money. Once again, there are all these little institutions that you can check with and see if they're giving out money. I would do it if I were you. Delta. Oh, okay. So American Express. One of the biggest mistakes that I see business owners making is that they will get an American Express card of some sort that the two old ones where you have to pay balances in full at the end of the month and all that. That is ludicrous. That is absolutely crazy. Who would want to do that? If in my opinion, if you're using your brain, you're going to always want to get a card where you can keep a balance. Now, if you can afford to pay it off at the end of every month, fantastic. That is an awesome thing to be able to do, because what that will do is help you grow your line of credit with them faster. But with this Delta, it was just awesome. Excuse me one second. Excuse me. It was awesome because not only did I have Delta American Express, but I also had a couple of other American Express cards. Once you're in American Express's system and you've been doing well with them, guess what? They will give you another card without running your credit file. So you can get, and there's tons. There's American Express Inc. They have a boatload of business cards. So that's something that I would consider if I were you. Is Delta American Express, Sky Miles. There's different ones out there, but American Express is really a good look. Let's see. I'm going to go back over here. Once we already went over Advanta. Oh, okay. So even though I'm telling you that what we're trying to accomplish here, we're not so much worried about Dun and Bradstreet at this point. But what I am going to say to you is that Dun and Bradstreet is something that we're going to slowly in this process do some work on. We're going to slowly work on it just in the background. It's not our focus, because that's not where we're going to get our initial 50, 100, 200, 300,000, maybe even more. Okay, we're not trying to think about Dun and Bradstreet. Dun and Bradstreet does not play in what we're trying to do. Having a corporation or an LLC does, but what we're doing currently, it's based on your credit profile's good standing, not your business's. But this is an old corporate card. Now, the thing that was cool about this card with KeyBank back in the day, I don't believe they offer these anymore, but they may. I don't know. But the thing about this was a $5,000 card, and it was given to me, to my business, obviously, Scooter King Inc., with literally no personal guarantor. Now, that's hard to do nowadays. It's extremely hard to do nowadays. Everybody wants a personal guarantor when you're getting cash cards, unsecured cash cards like MasterCard, Visa, Amex's, Discover, so on and so forth. Everybody wants, someone to be a guarantor nowadays because, for obvious reasons. After the big crash, a lot of banks, the rules and regulations changed, and so therefore, everything else had to change. But I am going to tell you something that I see happening in the world around us. right here, right now, the lending institutions are giving away boatloads of money, and it's going to get even worse, because what has happened in the last couple of days, as per this recording, or as of this recording, is that under the current president, which is Donald Trump, they're changing the banking regulations, and so they're making it such that banks that, which is part of the Dodd-Frank Act, and you probably don't know what that is, and probably don't give a crap, but this part is important for you to understand. The Dodd-Frank Act came into place, as well as other acts, when the country went into a financial downward spiral back in 2008, 2009, and so on and so forth. So they started putting all these different levers in place to keep things balanced. And Dodd-Frank was a part of that. But the deal is that they're abolishing, as many rules and laws as they can. And whenever they do this type of thing, they give away boatloads of money. And the reason they do it is because this is how the people at the top make money, right? By them giving away boatloads of money. And I don't want to get into the whole banking thing, but this is just a little banking lesson, if you will. They're giving away all this money, and they're charging interest on it, and they're even writing, because they're able to write off the money, the negatives, if you will, right? So if you don't pay, they're able to write it off and all this other crap. Any way it goes, they're making money, and then they're borrowing money at far less than what the prime interest rate is. So if they're lending you money, let's say on a card like this, and you're paying, I don't know, anywhere between 4 and 16.9% or something like that, and they're getting money at less than 1%, they're making money. And the thing is that they're getting money from the Fed, and they're getting it at less than 1%. Major institutions like Chase and so on and so forth, they're getting, and so that means they're making 16% on the money. And even if they default, or you default on this card, they're still making money on it, because it's a huge write-off for them. Okay, and they still have the potential of going after you by selling the debt to somebody else, right? So it's just money, money, money. And with this new loosening of the of what's going on right now, they're going to be giving away a ton of money, and then as soon as they give away enough money, they're going to collapse the economy again. And obviously that's just my opinion, but that's my opinion based upon everything that's happened, that every 10 to 15 years this country goes into a real estate downward spiral. Real estate goes first, and then the rest of the economy follows, and every time that happens, people are getting extremely wealthy. So that's why we have a greater wealth gap than we've ever had before. So I don't want to get into all that crap. That was probably enough of that, and you probably don't care about that. But let's get back to this. So one of the things that you really got to understand is that there is a reason for you to go out and get as much as you can, because it's always better for you at the end of the day. If things do go upside down, isn't it better to go upside down with a bunch of money in your pocket than it is to go upside down with no money in your pocket? Does that make sense? I mean, if you were to have, let's call it, over time, $500,000, and then things go south, isn't it better to end up with having $500,000 worth of invested capital than to have things go south for you or go bad for you, and you're in the position you're in currently, right? Having is always better than not, okay? So once again, here's all these different companies that able to get money from. Bank of America is always difficult to get money from. The Capital One, I already told you about them. Now I want to get over here. These are cards that are given to your business based purely on the business, and these are called trade cards, right, or trade credit. which is just credit that is that it has no true. Well, you can't take it and use it somewhere else. There's no MasterCard or Visa or Amex logo on it. It's just between your company or you and that particular business, allowing you to go to that business either in their store or online and purchase from them using their card. Now, what I wanted to show you is that obviously you see this is a personal card from them, back in the day, but I was also able to get a commercial card from them for Scooter King Inc. And I used to use the mess out of this card because I had a bunch of property at that time anyway in Augusta, Georgia, and in South Carolina. And I used to use this card like it was going out of style to rehab those properties. Same thing with Office Depot. Same thing with the Shell Fleet card. I used to that was my gas card. Same thing with Staples. This is let's see, yeah, they're both Scooter King, so maybe one card ran out, and then I don't know what the deal is why I have two of these here. But now over here I wanted to tell you about having a good credit mix and only getting credit from stores. If you're going to get credit from stores for your personal, then you want to make sure you're getting credit from stores that will give you a Visa or MasterCard logo. For your business to get these type of cards, that's great. Okay. But when you go to a store and you apply for credit, if they're not going to give you, like with Nordstrom's here, this was a $11,000 Nordstrom's card. It was anyway. With this Nordstrom's card, I wouldn't have. I don't give a crap about being able to shop at Nordstrom's. I could care less. But if Nordstrom's going to give me a card with a Visa or MasterCard logo, then that's what I want. So even if Nordstrom's is a place that I enjoy shopping at, I still want a card that allows me to use it anywhere. You get it? So that's important because I'm accomplishing two things at one time. I'm doing something for my personal credit, right? But at the same time, which is having a store card from Nordstrom's, because it does show Nordstrom's Bank on your credit file. So it shows a good revolving credit line. The same thing with Bloomingdale's, right? But both of them have Visa logos. I once again, if you're going to get credit from a store, you want to be able to get credit with a Visa or MasterCard logo on it, because you want to be able to use it anywhere, not just in the store. That way, it just expands your options, expands your horizons. And also what this does for me, or did for me, or will do for you when you do it this way, is that it will set it up so that you have a good mix of credit on your credit file. Hugely important. You want to show a good mix. They're always looking for that when it comes to credit. They want to see that you have some store credit. They want to see that you have maybe a loan. They want to see maybe you have a car payment. They want to say, and even once again, if you go to your own personal credit file and you look at the bottom of the credit file, it will tell you whether or not you have a good mix of credit or not. It'll say literally, that you have a good credit mix or you don't. If you just had one little thing sitting there, that's not a good look. So, expand your horizons, right? This is a game, and you have to play the game the way they want you to play it. So let's go over here. More store cards with, obviously the Visa logos on it, because I don't want a store card that doesn't offer this. It's a waste of my time and effort. If I go to a restaurant, or if I go on vacation, or if I go whatever, I want to do more than just have a card that says Nordstrom's on it so I can walk in their door and buy their crap. I want to be able to go anywhere, swipe my card or whatever, and be able to get credit or purchase whatever it is that I want to do wherever I'm at. And so I want you to really, really take heart to that. Once again, you know, Capital One, they will give, they're easy to get credit from, but they don't give you a lot of money. Okay, even for the over here for the corporate card, the business card, they just don't give you a lot of money. So I want to. This is a long video, I know, but I felt it's important that you can see that the person that's teaching you something is teaching you from an experience base, not just teaching you some crap that I read. Okay, so I want to give you it's a video that I'm going to go to YouTube and play for you, and it's going to, you know, do the little screen recording for it. So let me do this here. Wait. Don't say. No. Okay. YouTube. So these are videos of mine. Obviously, you know, my phone number's here, as you can see, 951-515-4728. You know, this is the same number I've had for, I don't even know how long. I think in the last 20 some odd years, I've changed my number twice. So this 951 number I've probably had for 15 years or something like that. So this is one of my videos. These are a lot of my videos. I have a lot of videos on YouTube. But I wanted to show you this video real quick because this is one of our clients. Okay, and I'm going to let this video play. Because basically it's just a short video telling you what I was able to do for this person.
$61,000 in one day of applications for one of our clients. So anyways, long story short, what we did was took a few steps to get.
Okay, wait a second. I don't know if the sound is really playing. So maybe I might have to shorten this or make it just. So look, basically, what I wanted to go over with you with this really fast is that this is Daniel. I set up a corporation for Daniel. Daniel is a awesome credit repair guy that I knew. He was one of the very few people that had the ability to just make really big things happen with credit. He's not as it doesn't seem to work for him as well as it used to, but whatever. So I'm gonna make this short. So with Daniel, what I did was I set up his corporation. We walked through all the steps of what to do, and these are the banks that Daniel was able to get money from in one sitting. So Daniel's credit file was in the high sevens, and so he was able to take the hits that running this many inquiries would cause on his credit file, because he was in the high sevens. So if you're in the lower sevens, right, then you don't want to do as many. But here's one of the things that you gotta do. When you're ready, when your FICO score is looking right and you're ready, one of the things that you're going to want to do is have everything written down that you're going to put in every slot on an application. So what I suggest to people is to get a paper application for credit, for business credit, right? Fill that bad boy out and keep it next to your computer when you're filling out online, okay? Because when you do that, you don't have to think as much, because it's right there. Exactly what you put on the first application is what you're going to put on the next application, the next application, and the next application. So if you're working with a credit score of, let's say, low sevens. Let's say your credit score is something like you have a 700, 705, 710 FICO score. Then you don't want to put too many inquiries, because it's going to give you potentially 3-point loss per inquiry when you're adding like 3 or 4 or 5 2 or 3 inquiries on there at one time. So you want to kind of guard against that. But if you have a stellar FICO score, you're in the 750s and above, like Daniel here was, then what you're going to do is you're going to sit down at your computer and you're going to pick the institutions you're going to go after all at one time, and you're just going to go after them. Okay? You're literally just going to go after them. And there's something that's important here that I want to show you. So one of the places that I really love to tell people to go to is Costco. Costco, American Express, they tend to give you a really decent line. And once again, you can see 2 different American Express cards, okay, that he applied for at the same time, so closed out one application, boom, went into the next application just like that. 15 grand a piece. I mean, how ridiculous is that, right? 15 grand a piece, both American Express, one's Delta, one's Costco, 15 grand a piece. If that's not the coolest thing in the world, I don't know what is, right? So 30 grand in one sitting. It took Daniel less than an hour, right? Because he had everything lined up. It took him less than an hour to fill out these 5 applications. 1, 2, 3, 4, 5. Yeah, it took him less than an hour to fill out these 5 applications and to obtain a total of $61,000 in one sitting is just ridiculous in my opinion, right? And more important for somebody like Daniel is that, he's a credit whiz. He knows credit repair. These inquiries won't be on his file, or would not have been on his file long, right? This is an older video, but I just wanted to show it because it's just, dude, it's just that simple. Citibank, $20,000, right? So Citi. B of A, 6. I already told you earlier, B of A does not give up a bunch of money. And to even get approved from B of A, so I don't even suggest you go to B of A until down the road. To get 6 grand from B of A, in my opinion, awesome. Because B of A is not a joke. I'm a bit surprised that he only got $5,000 from Chase, because Chase, as a rule of thumb, they give away money. They're pretty good about it. Citi does good. Look at this. Citi, $20,000, right? Bank of America, they do have some business programs right now. Bank of America has a business program, just like Wells Fargo does, where you can get up to $50,000 with Bank of America at the time of this recording. They're giving away, like, I'm not going to say giving away. You can get up to $50,000 with Bank of America. They have a business card program up to 50, and Wells Fargo has, I think it's $25,000 business program. But there's so many other banks out there, that you can go after. They're mid-sized banks, tend to do pretty good. So I just wanted to go through this with you really quick, because I know this video is starting to get long. But you see this, within an hour, he was able to apply for and subsequently approve for $61,000 in one day of applications. I mean, if that's not ridiculous, I don't know what is. So this video is over. It's already at 33 minutes, going on 34 minutes. But I'm hoping that you guys are really grasping this. I hope you guys are really, understanding this. It's not difficult. Play the game the way they want you to play it. Stay up on your payments. I'm sorry, I was trying to drink a little water. One of the things that, excuse me, I'm sorry. One of the things that I really want to say to you before I close this video out, and if you don't get much else from this video, I want to tell you this, and I want this to stick in your head. I've said it before, and I'm going to say it again. Once you get to a certain position, let's say that you get $50,000 in business lines of credit cards, right? That one of the things that you're going to do is you're going to take money off of those credit cards and you're going to put it away in whatever business account you're dealing with. Very important. The reason you're going to do that is because, let's just say, hypothetically, out of this $61,000, if you took $20,000 of it and you put it into a bank account, that's going to make you look really, really good with that banking institution, right? In your corporate account. It's going to make you look good with that institution. And you're going to take and pay all of your payments for these credit cards out of that account. The reason you're going to do that is because realistically, you want to put away 6 months of payments or better. But realistically, you're doing two things for yourself simultaneously. You're making yourself look good as far as the lending institution that you're banking with is concerned, because not a lot of people have 20 grand sitting in their account. And that means that there's a potential they're going to want to lend you more money, or in a loan, or give you more money in some fashion or form, like a credit card. So you're going to want to do that. But in addition to that, you're also going to want to I'm sorry, brain fade. You're gonna want to do that, and you're going to want to make sure your payments are taken out of there. And there's something else, and I just can't think of it, so I'll pop it into another video, whatever else I was thinking about. So this video is done, but just folks, this is easy, it's simple. Don't make it hard. I like to say this all the time. Use the KISS theory, which is just keep it simple, stupid. And if you keep this as simple as what Daniel did, right? Just lining everything up and then just applying back to back to back. You're done. It's over. It's simple. Okay. I'm not guaranteeing you or promising you that you're going to get the results that he was able to get, but I am going to say to you that if your credit score is right, your debt to income ratio is proper, right? So everything is lined up, you are going to get decent money. And especially with what's going on right now in the economy as of May 2018, I'm just telling you that it's going to be a good look for you if you're working this program right now. But this program has always worked. The people I learned it from, 2 decades ago, it was working back then. Regardless to what the economy is, someone's always giving out money, because when they stop giving out money, they stop making money. So it's just, you have to have your stuff tight and right. You have to have your stuff together. All right, so this is Pascal for Vanguard Global LLC.com. And this, once again, is our $30,000 to $300,000 credit building program and coaching program. And, you can always reach me at 951-515-4728 for our customers. And realistically, you should be a customer if you're watching this business, and that means you have access to me for a full 12 months. So we can, walk together, coach, I can coach you, and even help you out with your business strategy. That's something I enjoy doing. So if you don't know what business you want to go into, we can figure it out together. If you want to get a little coaching on your business, we can figure that out together. So that's it. Thank you so much. Have an awesome day.